Morning, everybody, and thank you, Mr. Zach, for taking this opportunity. Sorry that I kind of missed my spot. It's supposed to be the first one, but in hindsight, I think it's a good thing to happen because whether the execution is happening correctly or not, you only come to know when you benchmark it well. So I think the order, now you set the order correct. So, all right, so I think what I'm going to do today is some of you do not know us, will say a few words about us, but there are two insights that we would like to share. One is something which is very new for us, and we are quite excited. It's an event which is about focused on alternative investments, so we thought we'd touch upon that area as well and share some insight from our side. And the second thing that we'll do is that we'll basically take you through some of the very exciting trends that we're watching in India, and that's on the passive investment fund. So let's start with us. So we are, as some of you would know, many of you would know, part of National Stock Exchange, one of the leading stock exchanges in the world. We are at NSE Indices, a 25-year old organization, the largest index provider, the benchmark providers in the country. We are the owner of Nifty 50, which we proudly call the barometer of Indian equity market today. And of course, there are many other things that we do, but most importantly, we work very closely with the investor community as well as the fund management community in India to provide them the right kind of strategies which they can use either to create passive products or kind of use that particular index to benchmark their own performance on active managed funds. As of now, we have about 422 plus indices for which there are some funds available across FPE as well as F. We have about 478 equity and index funds which are tracking these indices collectively, and these are predominantly in India. What is very exciting is over the last couple of years, we have seen a very steady increase in India-focused fund outside India. And 33 of those funds today are tracking top indices. And we'll talk a little bit about that as well in the following slides. If you look at the overall passive AUM, almost about $100 billion of AUM is tracking our indices right now in India and outside India. And actively managed funds, which is worth about $500 billion. That's our indices. So with that, I think the next thing is, which is relevant for this particular audience. So we are from India, we are an Indian company, very proud of our heritage and origin, but we have been able to successfully put our footprints across the world with 33 funds now listed outside, we manage outside of India, but these funds are also available now across 20 exchanges around the world. So in Americas, in Europe, as well as in Asia, you can actually go to our exchange and buy an ETF, which allows you kind of replicate India strategy, and that's tracking our indices. Moving forward to the first point that I'm going to share. So this is an initiative that we have started quite recently, and that's our effort to benchmark what's happening in the private side, the investment, particularly in the AIF side. Now, of course, in India, as you know that private investment is not a new thing, but it's as old as me. But what is exciting in this particular industry is the changes that started happening around 2020, 2021. Right? Say we stepped in and they started bringing in some kind of order in terms of the way the scheme need to be classified and need to be reported, and some disclosure has to be done. They, along with IGCA, also mandated two organizations, and one of them is NSE Indices, to engage with the community, collect data, and provide some kind of transparent information so that allows the investors to understand what's happening in all their investments. The report that we release today will be released 2 reports every year. These are like 500 pages documents. I'm not going to share so much of information right here. We don't have the time. But what I've done in the next couple of slides kind of take a few phrases out of those particular reports that we thought we'll be sharing with you, which could be relevant for your knowledge. The first of all, you may know that these are the broad categories which are available from a alternative investments point of view. So category 1, category 3, category 1 is that your PC funds, other funds which could be of social ventures, what are essentially focused funds and infrastructure funds. Category 2 are essentially your debt funds, distress funds. These are also the real estate funds. They are both focused on residential real estate as well as the neo residential funds. And of course, it also carries the unlisted and equity funds and the pipe funds. Category 3 is the kind of hedge funds you have called multi-asset funds, long-short strategies, long-only strategies as well as hybrid funds. And if you look at now from an overall industry point of view, so the industry today has about 13.5 trillion rupees worth of commitment. That's roughly $150 billion. They have invested about 5.6 trillion rupees, roughly about $62 billion. And the total investment, fundraise was about $62 billion, and of almost entirely about $60 billion now being deployed. So if you look at this thing and combined with the next slide back down, so we have a commitment of $100 billion, $62 billion has been raised so far, and almost the entire fund has been deployed. Of course, a large part of the fund is in category 2, so that's across the system in terms of both the number of AIFs which are operating in the industry, there are a number of schemes which are being offered to investors, as well as public fund. And all of them collectively are providing some very interesting facts. I think 62 billion, if that is roughly the overall money has been deployed, and today if you look at the valuation, that starts about 6.73 lakh crore, which is roughly about $75 billion. So, if we do a very simple math, so $60 billion worth of investment, basically giving you a valuation of what it's like $8, it's about 25%. Today. What we are seeing right now in the industry is a consistent growth across all these parameters, both in terms of the number of AIFs being registered with the regulators, the number of schemes which are being offered to the investors, and of course the valuation growth to be seen a steady growth in the flag. And if you delve a little bit into the each of these categories, so category 1 for example, and you will find there are specific areas which are being played. So like for example, the category 1 is largely dominated by the venture funds, both in terms of the number of AMCs, the number of schemes available, as well as the valuations of this category 1. Category 2, similarly, another very interesting insight, while the unlisted fund that kind of publics in terms of the number of funds, whereas the number of AIFs operating in this fund. But if you look at the valuation distribution, now the listed and unlisted space, as well as the listed assets, has a capital size which share in the overall valuation distribution in this and category 3 again provides a largely long-only equity-oriented funds, which are kind of dominant also pie across all these particular bills. But things to be watched here, the pipe funds, which is also kind of growing over a period of time. Of course, now we know that there are competitions coming in from SIF, so that could be an interesting area to be watching for in the coming months. So I'm going a little fast on this, and just to kind of give you a sense of how all these funds, a lot of data, but let me kind of guide you through. So what we are seeing in the category 1, the venture capital funds have taken consistent data over period right now. If you look at the category 2, the PIKE fund, which is we work with listed or unlisted funds, it had been great consistently well, but this year or rather the latest period, which is March 2025 here, they have lost the crowd to the digital asset funds. So some dynamics out there which is playing out. And if you look at the category 3, which of course has been largely consistently provided by the law of the funds, but again, the first 1 year period for the current period that we're dropping, the hybrid funds have performed better than the long issues of only 25. So that's a bit of insights on what is happening on the alternate investments funds, the way has got operating, and then the valuations and the returns they're generating for the investment party. There are more insights available in the doc piece that we released. If you're interested, find out our colleagues in the booth and they will be able to provide you more information about that. Now let's talk about another interesting trend which is happening in India, and that's around the passive investments. So if you look at the numbers, which is really staggering. Now in 2020, the passive investment used to be hardly a percentage of the overall investment pool that we had in the country, that we were talking about less than 2 lakh crore of overall investment. And in the 7 years, that investment amount has now gone up to about 8 lakh crore. So it's close to about $170 billion of investments that we're talking about, which is grown from a very, very low pace. Interesting facts is on the inflow. Of course, the inflow dynamics have been mixed, but of the 7 years that we're driving, 3 years, the net inflow in passive funds have actually been more than the inflow in the active funds. This year, it's about 1,63 crore. Of course, a large part of it is dominated by the commodity-focused ETFs, which we have seen in the last couple of months' time. Interesting trend. You will see whether that particular trend stays or not. But more or less a steady growth in the inflow that continues to happen on the passive fund. So this some other interesting facts that we are seeing on the passive fund here as well. Like for example, the same kind of pattern that you would see when you look at the share of passive funds to the overall pie of the overall industry. And if you also look at the number of folios and the number of folios as a percentage of the total number of folios for the funds, you will basically see a similar kind of trend. So if you combine this, the growth in AUM, the inflow, and of course the way the overall passive industry is going as a share of the overall industry, basically gives you a signal that this is really growing for real, and investors are also investing this as a vehicle to bring in their money into the market. Now, another interesting factor that might also point out some of the inefficiencies that might exist in our market right now is what is happening within the passive universe. Now, of course, the growth story for India is significantly important, and that is largely being pushed by the institutions in India. So, when EPFO decided, which is the pension fund organizations in India, decided that they want to do direct equities, but they don't want to go and touch the equities. So they appointed few fund managers and decided to start investing through ETFs, Nifty 50 ETFs in the market. And we have seen a huge boost in investments coming into the form of ETF. But soon after that, what we have also started seeing is that the investment in the index funds have also started growing. And if you see the share of index funds in the passive is also consistently improving. So it's the overall passive pie that is growing, and within that, while the ETF is also growing at consistent and significant pace, the index funds is also something which investors are buying into. And I guess more or less similar trend that you will find out if you look at the net flow which is happening in the industry, as well as the folio growth and the number of schemes which are being launched on a consistent basis. Going forward, that basically gives you a very unique idea. Now, all these passive funds where are these money going? And what we have done is that we kind of looked at the time of indices that essentially people are investing in, while a large amount of funds is on the broad market indices like Nifty 50, but there are about 15% of the overall investment which is happening in thematic, which is happening in sectoral funds, as well as funds which are kind of tracking some smart beta indices. So that's about 15%. That segment is also growing. There's something to watch for going forward as well. I know my time is up, so I'm going to go really fast and try and finish my presentation. So that basically gives you a significant idea about what is the distribution of the funds in terms of number of funds. So we saw 15% of the AUM are bond is also the classes like sectoral, thematic, as well as smart beta. But if you see the number of funds available in this particular space is significantly higher. There's actually more than 50% of the overall number of funds available on this. The next slide basically tells you who are people investing in this fund. Of course, if you look at the AUM, it is largely dominated by the institutions, and the HNI is at the retail level with small slice of this AUM. But if you look at the index funds, not the ETF, the index funds, is the other way around. While the institution still had about 40% investments, but large part of the investment is coming from HNI as well as the retail investors. But if you look at the folios, that gives you a very different picture altogether. A large population of the folios, which is almost like 97 or 8%, are retail and HNI people who are coming into the market. Now, what's the role that we are playing here? I mean, we are very proud of the way that we have been able to engage with the industry and play a pivotal role in the overall growth of the passive industry in India. As of now, we have about 73% market share in overall AUM. And of course, there are about 77% market share that we have in terms of funds, actively managed funds or tracking our hedge funds. And that's also growing not only in the domestic market but in the international market. Now, the international market, as we have said, in 2020, we had less than $1 billion of AUM tracking Nifty Indices. Today, that has gone up to about $4.2 billion, and it's growing. And if you see from a number of funds point of view, in 2020, we have only 12 funds which will be tracking a Nifty Indices. Today, there are 33 funds which are available across 20 different international exchanges tracking our indices. These are some of the very popular indices. I don't have time, so we will be happy to catch you offsite to talk more about that. But the very important thing that I just wanted to leave behind is because the evolution in the industry is also leading us, pushing us to do a lot of innovations in the way that we create our indices. Our technologies have evolved towards the rate of light, and there are multiple different kind of calculation methodologies that we have introduced recently. And of course, that has links to different kind of indices which are available out in the market for people to invest and get different products. This is a very exciting space. In the last 5 years, there are about 26 hybrid indices that we have launched. Some of them are very, very popular. Defense, EV, tourism, renewable energy. These are some of the themes which are getting a lot of response from the retail and national investors. The last thing that we have done, and which is keeping in mind the investors not within India but investors outside India, is we have launched a new family of indices which we are calling now FPI indices. FPI is for foreign private investments. So this is going to be a new family of indices from Nifty for NSE Indices, so that are optimized, tuned to the requirement and need of the investors who are coming from outside. Now, what are the main areas that we are addressing in this? Now, when you are an international investor, not in India, investing in India from outside, there are a few things that we need to be careful about. One thing, of course, people have seen the story for large cap. They now have intentions to go bond market. That they will capture more mid cap as well as small cap. that need to be captured out there. But when you do that, if there are obvious challenges that you face and which have comes in terms of foreign investment units for each of the stocks. So that's a new thing that we have done. We have introduced a new filters in our methodology, which now takes care of the foreign investable free float available for this particular company. We have also introduced some special exclusion criteria because there might be stocks which are red flag. There might be stocks which have reached the NSTR or custodian limits, or there might be stocks which have got extremely low residual foreign investment limits. So we have now special mechanism to identify those stocks and exclude them from the indices so that execution becomes much more easier, and of course the tracking data will be taken care of. And that then of course factors in other factors to ensure that we pick up the most liquid stocks. And at the end, what we also ensure that this particular indices are rebalanced not 6 monthly but every quarter to ensure more updated information available to investors. Something that we are very, very excited about. We've been talking to many asset owners, asset managers about the existence of new types and new family of indices. We'd be happy to connect with many of you offline and take the conversation forward. So with that, I'm going to end my presentation. So thank you everyone.